FedEx shares popped higher after they reported Q1 2024 earnings last week. We'll take a look into this earnings release, dive into these numbers. We'll see how revenues declined, but their operating margins and operating incomes jumped. Take a look at it from a macro perspective in terms of gas prices, and take a look at the stock chart for FedEx. This one has been making a steady run higher over the last year, and we'll see if that can continue. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button. We are on the road to 600 subscribers, and your support would mean a lot. Hey guys, hope you're doing well out there. FedEx, now having a forward yield close to 2%, has performed quite nicely over the past year to date, up 47%, and over the past 1 year, this one is up 70%. They reported their Q1 last week. We'll take a look at this release. So revenue is coming in at $21.7 billion. That was down roughly 9% on a year-over-year basis, as last year they had reported revenues of closer to $23.2 billion. They did have a substantial beat on that EPS side, as they posted EPS numbers of $4.55. Analyst expectations were closer to $3.75, so a huge beat on that bottom line. We'll take a look at this one from its valuation and see if it makes sense. But on that operating income side, FedEx said their operating incomes increased 18% in this most recent quarter, even though they saw a 9% decline in revenue, and that was largely offset due to reducing operating expenses. And so FedEx focused on cost reductions and transformation efforts that benefited the quarter, including structural freight reductions, the alignment of staffing with volume levels, parking aircraft, and shifting to one delivery wave per day in the US. And so all of those reasons helped bring down costs over at FedEx, which ultimately helped their operating incomes and operating margins. Now, before jumping into this most recent quarter, I want to take a look at forward-looking estimates over at FedEx. We see for this fiscal 2024, they're expected to put up EPS numbers of $18.22. That is good for 22% growth year over year. However, they did provide forward-looking outlook on that sales side to come in flat to down year over year, and that's what the street expects, as sales are supposed to be closer to $89.5 billion. So you see this trend sort of continue for FedEx, where top line sales are expected to be roughly flat every year for the next 3 years. However, their bottom line EPS is going to grow at a very strong double-digit clip. And so that can be for a few reasons. Firstly, FedEx is doing a huge stock buyback. So buying back stock will help increase their EPS as they reduce shares outstanding, even if their earnings stay the same. So buying back shares will help increase EPS over the subsequent years. The other way they can do this is, again, by reducing costs in their business, which we saw from this most recent quarter. And if they reduce costs, they can help and drive efficiencies and increase their operating income and operating margins, which ultimately flow down to their bottom line. Now, taking a look at this most recent quarter, they reported revenues closer to $21.7 billion. That was roughly in line with Wall Street expectations for that top line. However, taking a look at these operating expenses, this is what they really were able to control costs on. And so you see salaries and employee benefits, they were roughly flat to down year over year. Purchase transportation was down roughly $700 million year over year. So that was a line where FedEx controlled costs. You see rental and landing fees roughly flat. Depreciation was flat year over year. Now this fuel cost is where FedEx also saved a ton of money, as you see fuel costs in this most recent quarter coming in at $1.1 billion compared to $1.8 billion same time last year. And this is largely because fuel costs have frankly just come down. You see last June, retail gasoline prices were closer to $5 per gallon, and now they're closer to $4 per gallon. So certainly when gas prices come down substantially like this, that will be reflected in a business like FedEx, where they're so heavily reliant on the current gas prices. Now, even current levels close to $4 per gallon are elevated. If you see historically, they're roughly on average closer to that $2 to $3.50 per gallon. And so if you believe gas prices will continue to come down, maybe not in 2024, but beyond 2024, well, that will certainly be reflected on FedEx's operating expenses line right here, and that can help their operating margins even further. And so you see operating expenses were down roughly $2 billion on a year-over-year basis, even though revenues were down close to $1.6 billion. and that will help our operating income jump, as that came in at we'll call it $1.5 billion. Last year we were sitting closer to $1.2 billion. They do pay some interest and other expenses, and we come down to a bottom line net income of close to $1 billion. That was higher from same time last year, where we were closer to $875 million. You see that EPS coming in at $4.28. Last year we were at just $3.37. So certainly FedEx doing a very good job controlling costs, and probably all these transformations that they've been talking about in these past quarters are now coming to fruition, as you see that reflect on their income statement. And even lower revenue, they were still able to control costs quite substantially, driving higher operating income and higher operating margins. Their operating margins went from roughly 5% up to 7% in this most recent quarter. Moving on to the statement of cash flows, we bring down that $1.1 billion net income number. We get to add back a lot of depreciation and amortization, get to add back some provisions for uncollectible accounts, some stock-based compensation, and accounts receivables. We get a free cash flow number in this most recent quarter close to $2.2 billion. Last year we were sitting at $1.6 billion. So very strong quarter from a cash flow basis. Now they use roughly half of that on their CapEx. So you see roughly $1.3 billion from that $2.2 billion was used towards their capital expenditures, and the rest of their free cash flow FedEx uses in certain financing activities, that being paying down some debt. When we jump over to the balance sheet, we'll see FedEx does have quite a bit of debt. And so although they just paid back $66 million worth of debt in this most recent quarter, they could, in my opinion, increase this at a faster pace in order to reduce the debt on their balance sheet. They did pay back roughly $300 million in dividends in this most recent quarter. You see that went up from a year ago, as FedEx is known for being a steady dividend increasing company. And so over the past year, they have likely raised their dividend. And over the past quarter, they bought back roughly $500 million worth of common stock. FedEx is doing a massive stock buyback, and we see that being reflected in this most recent quarter. All things being considered, FedEx does look quite strong from a cash flow basis. They have roughly $1 billion in this most recent quarter to kind of play around with, whether that's paying down a substantial amount of debt or increasing their dividends. We know they are paying roughly a $5.04 dividend per share, and considering they're expected to earn close to $18.22 on this upcoming year, yeah, they do have substantial room to increase that dividend payout, or they can continue to do share repurchases. Now, with the stock rallying more than 60% over the past 1 year, I don't know how much more shares they would like to repurchase, and possibly looking into paying down more debt would be better for FedEx. Taking a look at the balance sheet at FedEx, this is a quarter-over-quarter picture, and so over the last 3 months, not much has changed over at FedEx. We see cash and cash equivalents sitting closer to $7 billion. That's up roughly $200 million from a quarter ago. We see total assets sitting closer to $87.5 billion. We do have this long-term debt number of close to $20 billion, and so while that has been reduced from 3 months ago, $20 billion is still quite substantial over at FedEx. We see this is a company that's generating close to $1 billion on that bottom line and paying roughly $100 million in interest expenses. And so it's not huge, it is substantial over at FedEx. And so if they can look to reduce their long-term debt over these subsequent quarters, that will reduce the interest expenses they pay and ultimately could help their bottom line by close to at least 10%. And so FedEx should look into possibly paying down their long-term debt at a faster pace than maybe doing share repurchases over these next quarters. You see total other long-term liabilities coming in at $27 billion. So from a balance sheet, FedEx is looking quite strong. Moving on to the technicals over at FedEx, you see over the last 1 year, this one has been locked in an uptrend and has continuously retested this trend line, most recently testing it closer to earnings date. As you see, it was trading closer to $250 per share and then popped higher, now trading closer to $261 per share. I wouldn't be surprised over the subsequent days if it does come back and sort of backtest this trend line before resuming a move higher. Now, over the past 1 year, this doesn't have a whole lot of resistance above this 200, we'll call it $270 per share. And so if it can continue on this uptrend, it does have the room to move up to $300 on this uptrend. Now, on the downside, I would see support, first level support, closer to this $246 per share, but then a stronger level of support closer to this $216 per share. Now, this is a place where I would become interested in picking up shares of FedEx. Certainly, it's not trading wildly expensive. We see on this year's price to earnings trading closer to 14 times. FedEx does tend to trade between that 10 to 14 times price to earnings. And so 14 to 15 times is on the higher end, in my opinion, for FedEx. However, you see they are expected to increase profitability in these upcoming years substantially. And so picking this up on a 11 times next year's earnings certainly isn't overvalued wildly, in my opinion. However, the risk reward, in my opinion, would make a lot more sense down at these ranges, somewhere between $216 to even $230 per share. FedEx really represents the US economy and the global economy in a whole. And so if you feel that the US economy will see a recession in 2024, in that sense, FedEx can underperform. However, I don't think FedEx themselves see the US going into a recession in 2024. They do see muted growth on that top line sales. However, they are able to still grow their bottom line substantially. And even in this upcoming Q2, which is the Christmas quarter, that is usually seasonally strong for FedEx, and I wouldn't be surprised if they come with a strong beat on this $4.15 EPS for this upcoming Q2. And so I do think FedEx is a steady business that can be bought on really any substantial dips, and it is one of those companies that do pay close to a 2% dividend that has a room to grow substantially over these upcoming years. While it's not widely overvalued, I would wait for deeper pullbacks in FedEx, which then can be accumulated comfortably, in my opinion. That was FedEx for you guys. Let me know what you guys think of this one in the comment section below. Do you think FedEx is a buy, sell, or hold at $260 per share? As always, thanks so much for listening, and I'll see you guys in the next video.